CNBC-TV18, embarking on a quarter century.
All right, shifting focus to the commodity markets, Manisha Gupta is joining in. Manisha, what's the one commodity that you're tracking today?
Well, can't keep your eyes off natural gas prices because it has seen a complete collapse in the last couple of days there. Overnight yesterday, we saw 10% of a decline come in for the natural gas prices. I mean, this has been a very volatile commodity. You've seen 140 of a low and then almost 700 of a high, and we've seen very sharp profit taking come in for this space. After 10% of a decline, 1.5% is what we're looking at in sense of opportunity buying because it has been oversold on the charts. This is what natural gas has done in the last 1 month, down by 28%. And when you look at the last 12 months, we are 64% in the negative for the natural gas prices there. It also is trading at a 6-month lows at this point in time. Well, there are projections of warm weather going forward, not too much of negative temperatures in the first half of December, and that is the projection for the third week of December as well, and that seems to be weighing pardon me, on the prices there. Also, when you look at the U.S. domestic gas production, that has been at a record highs. The U.S. inventories, when you look at that, are up by nearly 7.3% on an year-on-year basis and up 6.5% on a 5-year average as well. So we are looking at record high production, record exports, and also inventories, which are at a multi-year highs right now. Also, when you look at the Europe gas prices, well, that was the story last year, but with there as well, we are looking at, when you look at the prices, they are in a contango and rather backwardation, and the January prices are lower than what you are seeing in for the month of April. So that tells you that there is a discount running in prices right now and the demand is not so strong. Also, when we saw the Panama congestion happen, and there were concerns that a lot of gas tankers which are stuck within that could lead to some price hike. But that also seems to be, those orders rather, have been filled by third-party supplies. There is just so much natural gas aflush in the international markets right now, and is the reason you have seen that pressure coming in. There also are reports suggesting that this oversupply could actually continue until 2025 and beyond. So there's not much impetus for the prices to grow from here. Also, when you look at the China crude imports for the month of November, they have seen a decline from Saudi Arabia at a near 5-month lows. So markets are looking at weaker demand continuing from China. What the street will watch out for is the OPEC monthly report that comes in on Wednesday. You have US inflation data today, the US Fed tomorrow. So the next 24, 48 hours, there is just so much data and reports coming in that will keep the prices quite choppy.
Okay, thanks a lot for that. Let's